Good afternoon. Welcome to Midcap Radar. I am Reema Tendulkar. With me is Ekta Batra. Hi, Ekta. The gains are all intact. This is looking very good for our markets. And these are the top stories that we're tracking at 1:30 p.m. It's a very green screen with the key indices holding firmly at the day's high. Midcaps outperform. Gainers far outnumber the losers. Metals, pharma, realty lead the charge. FMCG, energy lags.
Bombay Dyeing surges ahead of its board meeting to consider fundraising through a rights issue.
News flow boosts. Midcap Pharma names NATCO gains and an approval to launch an insecticide with an estimated market size of 2,000 crore rupees. Kim's jumps on after General Atlantic offloads 12 lakh shares of the hospital chain. ICICI Pru buys shares worth 151 crores.
SBI Cards and Payments gets a fillip after a dampener for non-bank lenders as the RBI sources tell CNBC-TV18 that there is no move to allow NBFCs to issue credit cards at present.
Metro Brands walls higher after the management tells CNBC-TV18 the footwear retailer is on track to open 260 stores over the next 3 years. Adds that e-commerce has grown as much as 79% CAGR over the last 3 years.
Well, welcome to the show. You're watching Midcap Radar on CNBC TV18, and it is definitely a fantastic day for all of the indices. So the Midcap index is up around 1.8%. For Apollo Hospitals, however, from the Nifty space, that seems to be getting a lot of momentum at this point in time. It's the top gain on the Nifty, up close to 6%. Remember that it is already lost around 9% of its market cap on a year-to-date basis. So there's definitely some catch-up which is taking place. The street will probably be watching what's taking place with Apollo 24/7, which is basically their digital arm. And remember, a lot of hospitals have been in focus on account of M&A opportunities as well. But let's welcome Manish Hathiramani of Deen Dayal Investments. He's joining in for a technical check on the markets. Manish, hi, welcome to the show. If you could start by telling us what your strategy would be on the indices, considering that we're going into an event which could probably turn sentiment as well overnight.
Good afternoon to you, Reema, Ekta, and to all our viewers. Thank you so much for having me on the show. Well, we are in a tricky situation as far as the Nifty is concerned. However, the good part is that the trend has not broken. We continue to be in a bullish market. We did threaten the lower levels, and to be specific, 17,400 was really the number to break. The fact that we have not broken that number, we have kind of reversed from there, only puts us back into the existing trend, which is the upside. In today's move, we are finding some resistance at the 17,950 mark, to be precise. And I feel a proper movement on the upside will only trigger after we cross 17,950 on a closing basis.
So till then, it's a no trade, Manish?
Well, I feel till then we are in a choppy and sideways market where 17,400 really is the level to watch out for. As long as we do not break that, the trend continues to remain positive. But for traders to enter into the long trend, we have to cross 17,950.
Got that. What about individual stocks?
So I'm working with two buy calls from the mid-cap space. My first one is on Canara Bank for a target of 265, stop loss of 235. The stock has taken good support at 240, and we are slowly re-entering the uptrend. The level of 240 to 250 has also clocked very good volumes. The second one is Ramco Cements for a target of 875, stop loss of 750. This stock recently gave us a breakout which was above the levels of 730. We then went into a consolidation phase and have again broken out above 790 few days back. The risk is to reward is favorable, which makes it a good buy candidate.
Okay, all right, Manish, we're going to let you go on that note. Thanks very much for joining in and giving us all of your strategies. So that's the view coming in on the technicals of the market. Well, for the markets, it's in fine fettle at this point in time. A lot of the drug stocks as well as healthcare stocks seem to be doing well, along with a couple of these auto stocks such as Eicher Motors. So remember that stock has already gained over 40% on a year-to-date basis. So it's building up a little bit more in terms of its market cap, up 3.5% currently. for Eicher Motors. But let's move on to our segment Mid-Cap Movers, where we have Vivek Iyer, who's standing by at the wall to tell us all of the broader market stocks that he's watching this afternoon. Vivek.
Well, some jubilant momentum seen as far as the entire broader end of the market. And now, some of the stocks that are on our radar. First, have a look at Advanced Enzyme. Now, this particular name, Nalanda Investment picked up stake, and from the promoters themselves, and the markets are clearly cheering that up almost 12% in the session. Jubilant Pharma too, on very strong volumes today, is trading higher by over 10%. The other one, of course, we are watching out for CE Info, Map My India. The launch of an app is something that has perked up the share price. And Patanjali Foods, after taking a breather for a couple of trading sessions, is once again up. Remember, some very aggressive targets being set out by the management as far as Patanjali is concerned. We are talking about some of the cement names as well. We've picked out just two, but a whole host of cement names continue to buzz. The entire mid-cap cement pack is actually seeing a complete re-rating on the back of the fact that it appears as though M&A activity is imminent as far as the cement space is concerned. On the other hand, if you're looking at some of the losers in the session, look out for these two stocks, Triveni Engineering and Triveni Turbine. Now, keep in mind, Triveni Engineering holds almost 21.85% stake in Triveni Turbine, and it is a stated ambition of the company that they would be looking to pair stake. Last couple of trading sessions, especially Triveni Engineering yesterday was up almost 18%. Today, it's seeing a little bit of a cool-off. Market expectations are that this particular corporate development could happen soon. Lastly, Fairchem Organics and Granule India, both of them are falling quite significantly in the session today.
Vivek, thank you very much for that. Get into a break. Up next, we'll be joined by P.S. Patel, the Chairman, Managing Director, CEO of PSP Projects, to discuss the company's recent order win.
Welcome back. Well, it's holding up quite steadily for the markets at this point in time. The mid-cap index is up around 1.6%. We have a good advance decline ratio on our hands as well. So over 2,300 stocks advancing on the Bombay Stock Exchange and around 1,200 stocks which are declining on the Bombay Stock Exchange at this point. There are only two losers on the Nifty. So that's the kind of momentum that we have in terms of breadth, in terms of scale for our markets, and in terms of gains that we're seeing at this point in time. But let's concentrate on one particular company. PSP Projects is in focus. The construction engineering company recently bagged orders worth nearly 170 crores. We have with us Mr. P.S. Patel, who's the chairman and MD and CEO of the company, who's joining in to discuss the recent spate of order wins and the business outlook. Mr. Patel, hi, thanks very much for joining in. Well, it seems as though the capex cycle is picking up. So give us a sense in terms of where exactly have you won these orders from? Which segment does it comprise of in terms of business for you? And what is it looking like in terms of future order book?
Yeah, these two orders which we have declared, one is about the repeat order from one of our clients for making food making industry. That's the needle making factory and an expansion of the factory which we have already done last year. So 115 crore comes from that factory, and the second order is from again a repeat client of our precast plant, that is L&T. So that was an addition of further 50 crore, which totals to our precast order from L&T 295. So in general, what we have projected for this year to reach up to 2,500 crore new inflow of order, I think we have already reached to 1,500 crore. So probably it will be, as the market is going good and the economical cycle, the way that the country is developing, I think we are getting sufficient inquiries. Presently also we are having an order to bid book of about 4,000 crore. So reaching to 2,500 crore new inflow of order for this year is not going to be a big task. And presently also till June, our outstanding order book is about 5,500 crore. So keeping the same cycle of increasing our order book by 20% growth to our revenue, I think at the end of the next year, 2023, we should remain with an outstanding order book of about 5,000 crore, which will be sufficient for again next 1 and a half.
Mr. Patel, just to get some numbers in, you're saying your order book as of June was 5,500 crore?
As of June plus the order of this quarter.
Okay,
The new quarter, yeah, this quarter also. So I can't because the revenue which we have generated in July and August and September will be deducted from that 5,500 crore because the orders which I am saying is 965 includes till today.
Okay, so this 5,500 crore is the current order book, which compares with 4,613 as of Q1 end, right?
Yeah.
Incremental
right.
900
Yeah.
crore. And this order inflow target of 2,500 crore for FY23, in Q1, your order inflows were just 550 crore. So you're confident that you will be able to achieve nearly 2,000 crore of order wins between Q2, Q3 and Q4?
Yeah, see, because if you see the total of order inflow for this year, till whatever order which we have declared and for which we are discussing, that is 160 crore, totals to 1,511 crore till today as a fresh order for this year. So probably we have to further go for further 1,000 crore for next 5 to 6 months. So probably I don't see that problem because we have a strong bid pipeline of about 4,000.
Okay, so you have a bid pipeline of around 4,000 crores. And all this is, how much of that bid pipeline is repeat orders or from the same clients or companies?
So probably the order which I have declared is from the same client, and one of the orders which we are bidding again is from a repeat client, which is of a chocolate factory. So all other projects which we are bidding presently are not from the repeat client, but only one tender of 160 crore which we are bidding is from a repeat client.
Okay, I think I heard chocolate factory, if I'm not mistaken.
Yeah, chocolate factory. Yeah, chocolate factory.
That sounds even more interesting. But nonetheless, you had some labor issues in UP and you were guiding for around 1,000 odd crores of revenue from UP in FY23. Can you tell us where things stand? Has it been resolved?
It was not actually a labor problem only in UP, as these 2 years were very heavy corona. March 20 was the first corona hit. March 21 was the second corona which affected UP, BR to a larger extent. So both these seasons, both these years, these people were not able to go for any marriages and their functions. So probably this was the only year that they could go for such types of social gathering. So this time the movement of people in April, May was much more higher than what we have been expecting throughout our past career. So that was the only reason. But after June, the things have recovered and the labors are full and the things are moving much on a positive line now. And there is no shortfall of labor as of.
What are the current margins you're enjoying, Mr. Patel?
Pardon me?
The current margins, we've seen a softening in commodity prices. So wanted to understand, have you been able to benefit from that or do you have a fixed price structure? What are the margins?
Mostly 50% projects are on a fixed price and 50% projects are on a prices which is passed through as far as the major materials like cement and steel and flooring materials are concerned. The projects which are on a fixed price, yeah, we had some impact during last year, just after Corona March 21. But again, the rates have come down, neutralized to the level what we have bidded for. So probably not much impact as of now because of these commodity prices. And as such, benefit out of getting reduction of that rate, we are not going to get because the tenders of UP which we bidded was in March 21. And then there was wait about 4 to 6 months. And then later there is in January 2022, the rates have stabilized.
Okay. What does all this mean for your balance sheet? Can you just give us a sense in terms of what your consolidated debt is on the books? How much free cash flow are you probably generating? How much is probably going to eventually go into debt reduction? What would you be comfortable with by the end of the year?
As such, our long-term debt is not more than 100 crore. And out of that, some of the things are as a WCDL. So each and every quarter we are reducing that. At the same time, whenever the money is required, we are utilizing more on from our FDO.
You know, recently you had said that you were looking or you were considering to bid for some DLF residential, which is a 1,000 crore project in Delhi. Have you made up your mind about it?
No, still that tender is in under process.
Okay. Could you give us a sense more about this government versus private breakup? I think about 63% of your projects are government owned. Do you think the mix will change?
Yeah, but that mix has already changed after March 22. So probably if you see the new on the current order book versus the past year's order book, there will be more probably near to 50-50.
Okay. Does that mean that receivables are better as well? And, you know, how exactly is the receivable situation across the government tenders as well as private if you had to compare it to, say, 2021?
Mostly projects in government, what we are doing, there is not much problem as far as receivables is concerned. Yeah, of course, private receivables is much better than the government, but your billing cycle is proper, and if you are able to make the bills on time, I think not more than 45 days, the government money also receives on time.
Okay. And just one final word on this Bhiwandi project. I think it was stuck.
Yeah, that project is still stuck. We have asked for the arbitrations to start. So, because of the one or two hearings been prolonged, so probably this hearing we may go for arbitrations to start.
Okay, all right, Mr. Patel, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is PSP Projects. The stock is higher by around 0.5% at this point in time. We need to take a short break, but up next we'll put the focus on Shilpa Medicare, which is trading in the green after it received the CDSCO approval for a topical hemostatic spray. So that's basically going to prevent any kind of bleeding from injuries. We'll tell you more about that once we're back.
Welcome back. This is our special Midcap Spotlight segment. We're focusing on Shilpa Medicare, and who better than Ekta to tell us more about this? Ekta.
Well, yes, and there is some news with regards to Zydus Life, where they, in fact, I think have launched Revlimid generic in the US markets. So maybe we should, pull that up for you. They had already received approval just a couple of days ago. So I think that is basically the launch which is following now. So as you can see, that stock is higher by around 1.7%. We'll get to that in just a bit. But important piece of news to track for Zydus Life, for Cadila, and the others. Yes, I think it is Revlimid generic, the blockbuster cancer drug, which they had received approval for. Cipla had received approval for. Dr. Reddy's as well, for they have exclusivity on 2 of the strengths. So that was an important launch that the street was anticipating. So Zydus Life too has thrown its hat in the ring. But nonetheless, one particular company that I'm tracking is Shilpa Medicare. They did speak to us earlier in the morning. The news with regards to Shilpa Medicare is that they have received the government nod for topical hemostatic spray, which is basically a particular spray in the Indian market which will be used to stop bleeding from severe injuries. It can be used in the military, etc. Now, the company will be the first to manufacture such a particular formulation in India. As per the company, there was a study done on 80 patients as well. Now, separately, while there is some potential in this particular drug, we'll have to track the sales over a period of time. There are other triggers. So, for example, the companies transferred their API business in a slump sale to the wholly owned subsidiary Shilpa Pharma Life Sciences. They said that they could be looking at options for fundraising. It could be as early as December, and they could probably look at an IPO as well as a strategic partner. Plus, the API business, China Plus One, is an important factor which is playing out. The company's formulation manufacturing unit in Telangana was issued an import alert all the way back in Feb 2021 by the US FDA. They said that they're working closely with the US FDA to lift this particular import alert, which is an important trigger. The company also says that they're focusing on biosimilars, and there are many complex products which the company has filed within the formulation segment. One trigger would be an improvement in their margins, which had hit multi-quarter lows at around 8% in the previous quarter. We did catch up with the management earlier in the morning. Listen into what they had to say.
We manufactured the tranexamic acid. We were the first to manufacture tranexamic acid in India using the Japanese technology. We have made the spray, which can be very conveniently can be carried out anywhere. Especially, we have done this study on the dental. That is called as the, we have taken the, we call it as the Gyanadanta. That teeth, if you remove it, then the highest blood flow will come. we have done that study on 80 patients, and where the blood flow is stopped within 1.5 to 2 minutes. We are trying to see that in the onco API, then going backward, some of the China plus one factor is also playing very important role. And what we are trying to do this now is which are the 100% imported material from the China on the intermediate. We are focusing such intermediate and trying to manufacture such by using the flow chemistry. We are working closely with the FDA, and we have done majority of the remediation measures, whatever has been committed or suggested by the FDA, also called consultant. And we have submitted all this CAPA, OS handling, everything has been submitted to the FDA. FDA is almost, they have completed their review. We are waiting for whenever, the next, we have not heard last 1.5 months from them. But we are eagerly waiting that they should do our inspection.
Well, the markets are holding on to all their gains. The Midcap index has tapered a bit, so it was up about 2%. Now it's higher by 1.6%. As you can see, a little bit of a knock, not too much. Cement continues to have a good day. So Heidelberg Cement is leading the pack on the Midcap end. That's up by close to about 6.5%. Rain Industries is showing you some strength. Adani Wilmar, which is launching more of the ready-to-eat foods. This is something Shilpa told us yesterday. The stock has gained another 5%. In fact, locked in an upper circuit of close to about 5%. With that, we're out of time on Midcap Radar. Thank you for watching.